guys? Welcome to Stock Talk with Nico Criticos. Today, we are going to be going over Mastercard, ticker MA. I think most people know what they do. They're pretty much a duopoly along with Visa in the credit card industry. And this year, this stock is up about 11%. I recently picked up some shares, and I forgot how many it was, but I figured it's time to start building a position in this because of once we go through all the different things about this company, you'll see. Now, this stock in the last couple of years, really since 2020, has traded in this range of around $350. It's pretty much been in this range for roughly 3 years. So my thinking going into this is that it's time for this stock to kind of have another breakthrough and possibly go to $500 or so. And the first thing we're going to look at is the revenue for this company. Revenue is going up an average of about 12% per year. Okay. Last year they did $22 billion. Net income for this company is averaging about 20% in the last 5 years, but 13 or 14% in the last 10 years. Last year they did $9.9 billion of net income. The PE ratio for this company on a 2023 basis is a 31. So they're trading at 31 times earnings relative to this $12 of EPS. And then next year, they're expected to do even more. If we compare that to where Mastercard normally trades, we can see that Mastercard went as high as 55 in 2020. And in the last decade, it hovered at around 27. But in the last 5 years, the lowest it's really been is 28. So I feel comfortable paying this 31 times earnings for this stock at the moment. Then we're going to look at if the company is innovative. Do they have a moat? Absolutely. This is an extremely large moat business, and that's why I feel kind of comfortable. I shouldn't say kind of comfortable. I feel very comfortable investing into this stock. The industry is growing for this company. People keep using credit cards. Their return on invested capital is pretty much as good as it gets. If we go to return on invested capital, what we're going to see is that over the last 5 to 10 years, this stock has done a minimum of 37%. The majority of companies don't ever get anywhere near 37%. This company has gone as high as 55, 56% return on capital employed. That might be the highest you're going to find. For how consistent this is, that might be the highest you're going to find. Is the company growing their equity? No, unfortunately not. This is one of the only minor weaknesses of the business. They have not grown, at least in the last 12 months, their equity has not been growing how it should. It's gone from 7.1 to 5.4. Now, if we look at the past, okay, don't want that on. And the equity in the last couple of years has gone from 5.9 to 6.3. So not great, but not horrible. It's definitely not over 15% of the market cap. This is a giant company trading at a $364 billion market cap, and the company only has a couple $1 billion of equity. The profit margin is definitely over 10%. Once again, this is pretty much as good as it gets. We're looking at a profit margin of 44%. As for cash and receivables on the balance sheet, it is more than the average annual income. I think it's roughly $10 billion. Yeah, about $10 billion, and they're doing under $10 billion of income normally. So that will get a check. Their dividend is healthy. I'm mainly just looking at the payout ratio because I think that's the most important. 21%. They definitely could afford to even double or triple the dividend. The company is over 20 years old. It's founded in the 1960s. And then the last one is growing free cash flow, which I recently added, which is one of the most important, if not the most important. I say the free cash flow along with the P/E ratio and return on invested capital are probably the three most important. And the free cash flow for this business is looking nice and healthy. From 2008, it's gone from $240 million to now $10 billion. So what is that? That's I don't even know. What is that? Is that a 50x? No, not a 50x. Oh yeah. I don't know. It's a big jump. So that is why I'm bullish on Mastercard. And yeah, all the numbers look strong besides for those minor things like the equity on their balance sheet.